Hi, Greg Lewis, MetaStock Software. In just a moment, Jeff Gibby will be presenting his favorite systems in MetaStock. I think you're really going to enjoy it. And if you don't have MetaStock yet, make sure to visit metastock.com/traders-summit 3-for-1 to get your free extended trial. That's metastock.com/traders-summit 3-for-1, or just click on one of the links. Thank you, and I hope you enjoy your presentation.
All right, let's go ahead and do an audio check. It's Jeff Gibby. If you can hear me, go ahead and type in the questions. Just yes, and we're going to go ahead and get underway. So, all right, good, awesome, awesome. Welcome. Very interesting poll results. I liked how everybody was split on who won the debate or didn't watch it. It was like about 50% didn't watch it, 50-50 other way. So let's go ahead and get started. I think this will be a fun class today. What I want to do is I want to talk about some of my favorite systems in MetaStock. It's a brand new class. I haven't tried it. I've done I've done parts of this for an hour, so we're going to try and condense it down a little bit, make it something that you guys can kind of watch through and see. And for those of you that use MetaStock, you may not even be aware some of these exist, and so hopefully this will be helpful for you. In any case, let's go ahead and get started. So I'll start with the disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So what are we going to talk about today? I decided to kind of just do a little bit of a different class today. I'm going to talk about really 3 of my favorite trading systems that are in MetaStock. And so what I'm going to try and do is actually kind of fit this all into 1 hour. You could kind of call dynamic trading tools a trading methodology. You could trade off of it, but it's very, very cool if you're looking at support and resistance. LCI, if you played with it, it's a very, very cool tool as well. And RMO is, if you guys have watched any of the classes I've done, it's the first trading methodology that I actually used to start trading. And it's been some time. It's been a long time ago, but it's still a great system, still performs well. And so let's go ahead and get started there. We don't have a lot of PowerPoints today. I'm going to basically be flipping into the software, showing you in the software how to look at stuff. But I do have some PowerPoints. So anyway, RMO is a trading methodology. It's come included with MetaStock since version, I think, 10. So it's been in there for a while now. And it's put together by Rahul Mohinder. It's the Rahul Mohinder oscillator. In case you're not familiar with Rahul, I consider Rahul a good friend, but he is a famous technician in India. And what he does is he actually sits down and teaches people how to trade. He's been on CNBC, CNN India. He's one of our best dealers in the world. And so kind of the genesis of kind of how we got RMO is we had Rahul come into our office and we said, okay, well, show us what you're teaching people. And he showed us one of his methodologies that he likes to call the RMO method, and we liked it. We liked it a lot. And so we actually bought the rights to RMO from him, included in every version of MetaStock, and I've probably given hundreds of classes on this. All of them have been about an hour, but I think I can kind of give you the important bits in just about 20 minutes or so. So anyway, it is a trend following system. The reason I like it, and I'm sure you hear the words, a trend is your friend, or a rising tide lifts a boat, etc., etc., etc. But the reason I like, and I believe that's true, I like trend following systems quite a bit. And the reason I like to show RMO is is, especially if you're kind of, I know a lot of you are new because we offered the stocks and commodities trial, or the extended trial through the online trading summit is what I should say. But we offered you the extended trial where you get a chance to try it for 30 days, and or 90 days, sorry. And this is something that I think you can use as you're kind of learning the other tools in MetaStock, and it's fairly easy to understand. If I do my job right, you can understand how to identify whether you're in a bullish trend or a bearish trend. You're going to follow 3 rules basically to get into a trade. And I've shown this all over the place on all kinds of instruments in all kinds of different countries. It works really, really well. So, and it is, like I said, about a 3-step process. So let's go ahead. If we're going to trade based on the trend, the first thing we need to do is be able to identify the trend. Okay, and it's fairly easy to do. When we start to talk about trends with this particular product, he talks about 3 different trends. He talks about a primary, and a primary would be like a long-term trend. He also talks about a short-term and an intermediate trend as well. And so we're going to use all 3 of them in terms of the way that we get into a trade. And I'll go through that with you. So let's go ahead and talk about how we identify the trend in, let's say, MetaStock. So let me go ahead. This is a chart I pulled up. Wrong button. This is a chart today that I pulled up of Nike. What I'm going to do is I'm going to apply the RMO trade model to it. So I'm going to go ahead and right-click here on the chart. You can, of course, do this from within. So just open it up with that. I'm just going to apply the template, and we're going to do the RMO trade model. So you go ahead and click on apply here. That's going to add all of the indicators, the rules, the studies, that kind of stuff into the software. Just going to resize things a little bit. And remember, our goal here is to identify the primary trend. So the first thing we want to be able to do is we want to be able to identify is this stock going up or down in a very digital way, not in a subjective way. Okay, well, appears to be going down. Well, it definitely appears to be going down the last week, but we want to be able to kind of quantify that, and we want to have something that's not something that's subjective at all. Okay, and to do that, Rahul uses the Rahul-Mohinder oscillator. So if I come up here, right here, what I've got is this is the Rahul-Mohinder oscillator. I've just made it full screen so you can see it. And the way you read this is very, very simple. If you'll notice a few things about this, it's either above 0 or below 0. Okay, if it's below 0, then what you're going to say is you're going to say your primary trend is bearish. If it's above 0, what you're going to say is your primary trend is bullish. Okay, and remember, we want to trade in connection with the trend. So if it's bullish, the way you would actually manage that is you're allowed to go long. Okay, it's not a signal to get in the market. So in other words, if it just goes up above 0, you're not going to buy into the market. It's a permission, if you would, to go long. Okay, if it's down below 0, you're allowed to go short. Okay, you're not allowed to go against the trend, right? Remember, we want to trade with the trend. We want to let the tide lift our boats. So as long as it's below 0, which it has been for the better part of this year on Nike, there's been a few times, obviously, where it's gone up above 0, but for the most part, it's been below 0 the entire year. As long as it's below 0, what we're going to do as part of our process is we're only going to look at short trades. Okay, so if we're looking at this today, you always have to do your analysis right here on the hard right edge of the chart. But if you're looking at it today, step 1, you're going to say, okay, well, Nike's bearish. I'm allowed to take short positions. I'm not allowed to go long. That's it. Okay. We also do represent this down here on the chart. You'll have this ribbon when you apply this template that says RMO's bullish, RMO's bearish. And right now you can see that that ribbon is red, so whichever you prefer. You can look at the indicator if you want, or you can look at the Rahul-Mohinder ribbon down at the bottom to kind of identify whether it's bullish or bearish. So that's it. That's step number 1. So let's go just kind of swap back in here. To reiterate, if the RMO is in a bullish zone, you're allowed to buy. It's not a trigger to get into the market just because it pops up above 0. Then you're going to change your bias, but you're not going to go ahead and get in the market, and you're not allowed to trade against that. Okay, so that's step 1. Step 2 is to identify a short-term trend. Okay, so we've already identified the long-term is bullish, or I'm sorry, bearish on Nike. Now we want to look at the short-term trend, and we want to identify or does the short-term trend line up? So let's go ahead and go back to the chart. And to do that, what I'm going to do is, and I prefer a little bit of a different display with these indicators, which is fine. What I want to do is I'm actually going to change this blue line here, this blue histogram line, into a line instead of a histogram. That way I can just see it a little bit more clearly. For me, I think that's a little bit clearer on the chart. Okay. What I'm going to do now is we're going to focus our attention on this pink line here, not the blue line, but the pink line. You'll notice that like the RMO, or like it's going to be above or below 0. So right now it's below 0. And it's read the same way as the RMO, which kind of keeps things simple, right? So, and you trade it, or you kind of analyze it. The only difference is you'll notice that it has a tendency to move a lot faster than the long-term trend because we're looking at a shorter time frame. So we're identifying what that shorter term time frame is. And that's why it's going to be a little bit more swingy. We're looking at a much shorter time frame, so it doesn't take as much of an up move to get into an uptrend and a short-term trend. Okay, so the important parts about this, again, it's below 0 right now, which means it matches. It has to match with our primary trend. Since it matches and they're both bearish right now, we're still allowed to short. Okay, if we looked at this and it was bullish and our primary trend was bearish, we would not take a trade. We'd wait. And again, the idea here is we want to put the odds in our favor, and we do that by looking at different indicators that measure different time frames. And it's kind of like waiting for a traffic light. You know, you kind of want to get as much kind of in your favor as you can. Okay, so that's it. Well, basically, right now, to kind of sum up, if we're looking at the hard right edge of the chart again, what you're going to see is you're going to see that it's bearish on that short term, and it was bearish on its long-term trend. The other way we identify this on the chart, you don't really need to use the indicators if you don't want to. But the other way we identify this on the chart is we have right here highlight. You'll notice when this drops a bit down below 0 as it did right here, the bars start to highlight red. If it's up above 0 like it was during this little upswing right here, then the bars will begin to highlight themselves blue. Okay? So now, just to kind of like to go through the rules again, just make sure I'm kind of explaining them properly, but you do want them to match. If the primary trend is bullish and the short-term trend is bullish, you're allowed to buy. You're not allowed to short, not a trigger. If they're both bearish, you're allowed to short. You're not allowed to go long, and it's not a trigger. We'll talk about the trigger next. It's pretty easy to understand as well. Okay. Again, if they don't match, if it's bullish long-term and it's bearish short-term, you want to wait until they match. Okay, so then you're allowed to wait. You can run the exploration in MetaStock and allow you to find maybe opportunities that exist right now, but you're not allowed to trade. Miguel, hello. How are you today? If you guys do have questions, type them in. I'll take a look at them over here, and I'll try and make sure I answer them as we go through this stuff, okay? Very cool. All right, so let's talk about rule number 3. Let's identify the trigger. Miguel, yes, I'm recording, and I will basically what I'll do is I'll have an archive of the recording, hopefully ready tomorrow, and I'll send it out in the morning. It's a good question, Sam. So the color of the ribbon matches the long term, or the RMO, the long term, the primary trend. And then the color of the bar, if it's red, it means short term, you're bearish. If the color of the bar is blue, it means short term, you're bullish. Okay, did I answer your question? Okay, good. All right, so let's talk a little bit about the trigger. And to do that, what we're going to do is we're going to just kind of, we're going to go ahead and look at these two lines again. I changed this one to a line. And you might have guessed it already, but this was the short-term line. We already looked at the long-term line. The blue line kind of is somewhere in the middle because it's looking at the medium term. And the only thing that's a little bit different about this particular indicator is we don't care if it's above 0 or below 0. What we're looking for is we're looking for a pickup in the trend, in the short-term trend, to take a buy or a sell signal. So for example, if we're looking right here, And to get really specific, I'm just going to draw a little bit of a line on the chart right here. Or actually, let's do it right over here. Okay. What's happening here is the short-term momentum, or the short-term trend, is going up faster than the medium-term trend, and there's a little bit of a cross signal. Rahul calls this, he calls it a change of momentum or a change of force. And that's what we use as our trigger to get into the market, as long as it's in the appropriate zone. So in this particular, and the same is true for the downside. So right here where it crosses down, below its signal line, then that would be a change of momentum to the downside. We'd use that as an opportunity to go short, but only if we're bearish long-term and bearish short-term. Right? So here we had another shift of momentum up to the top side and another shift to the downside. And you'll notice when these shift of momentums happen, what you can do is you can kind of look at the chart. If I just push the chart active or back out to the window, you'll notice when that change of momentum happens, we actually paint a bar on the chart for you. Okay? Right here. So I'm going to go ahead and zoom in. We'll look at kind of how this trigger works out. Right here you'll notice we do have a change of momentum to the short side. This happened, again, we're looking at Nike, this happened about 22 days ago. I was looking at the calendar, doing a little bit of math, but it happened on the 6th of September. Okay, so if we're looking at this on the 6th of September, was it the 6th of September? Yes, it was. What we're going to say is, okay, well, is our long-term trend bearish? Yes, it is. Okay, so we're allowed to short. Is our short-term trend bullish? It's not. Or is it bearish? It's not. So we're not allowed to short. So we can't take advantage of this signal yet. We want to wait until the trend goes into our favor. Okay. So in this particular case, you would wait. Okay. And so if you came in the very next day, which was the 9/7, you're still not allowed to buy. Okay. What you're going to do is you're gonna want to wait until that trend goes red or until that bar goes red. Okay, we want everything to kind of line up before we take a trade. Okay, and you're never going to get in at the exact top. You're never going to take a short position up here because we want the trends to establish and kind of go in the proper direction before we actually start to take those trades. Okay, so right here is where everything kind of lines up. And the way we would kind of trade this, according to the way Rahul does it, is he wants one more confirmation. Okay. So on the day where everything lines up, what I'm going to do is I'm going to take a close look at I'm going to go ahead and delete this horizontal line, or this vertical line, so I can make some room for some horizontal lines. But what we're going to do is so now everything's kind of lined up. We are ready to take a short position. And what we want to do is we want to establish a couple of important points. Okay. The first thing that we're going to do is for taking a short position is we're going to take a look at the low for the day you're going short and the low of the day before, and you're going to put a little bit of a line, just a couple ticks below that level. Okay, so right here I'm going to say basically if Nike goes down below this point, which is going to be 56.06, I'm going to go ahead and take a short position. Okay, and then what I want to do as well is I want to establish what my stop level is going to be. Okay, and so the way that we do that is we're going to look at again the bar where everything lines up, and we're going to look at the previous couple of bars. What we want to do is we want to figure out where a resistance level is going to be. Okay, and I'd say kind of just eyeball on it. I'd put my resistance right above here. Okay, got a little bit of a pullback into the upper section here, and then it started to fall apart from there. And that's going to be your stop loss. Okay, so what I'm going to say is if Nike goes down below 56.06, just writing this down, 56.06, I'm going to go ahead and go short. Okay, if I take that short position, the most I'm going to let it go before I exit out of my trade is I'm going to let it go down to 59.24. Okay, so go ahead and write that number down, which is going to be about $3.20 of risk. Okay, so now that I know where my entry point is, and now I know that I know where my stop is, excluding gaps and things like that, I have a fairly good idea of how much risk I'm going to take. And if this is more risk than you want to take on a trade, then I would recommend you look for another trade. But in this particular case, it gives you a really good idea. And I would say that you want to set your stops before you get into the market, okay? And you don't want to make them negotiable. In other words, if it goes and hits your stop, get out. The market's pretty forgiving. You can get back in a trade if you were wrong. But it's always I'm a firm believer in stops. In this particular example, we did go ahead and put in a short position. There haven't been any scenarios in which we would adjust our stop yet. So I'm going to go back in time and show you kind of the previous shorting example. Kind of tell you how, because what you will want to do is you'll want to use stops as a way to lock in profits using this methodology. Okay, so let's go back a little bit here, and I'm just going to kind of go back to kind of this. Let's go ahead and zoom out just a little bit, and we'll go to the beginning of this trade right here. Okay, so I'm going to go through the rules. I'm about 20 minutes in, and we'll kind of establish exactly what's going on. So let's say we're taking this short position here. You'll notice there are trades that aren't going to work out. Like this one right here, we would have probably stopped out in our stop, or I think we would have probably actually had a stop right here. We would have reversed at some point here, right? If we would have taken this long position, let's say we put a stop right about here, we would have triggered into that trade. Okay, we probably would have reversed it right about here where everything goes negative. Okay, most of the time you're going to be getting out of this on a stop loss or target though, or a stop loss, either your initial stop loss or one you've moved. So what we're going to see right here, let's go ahead and kind of just look at it here. Here we get a short signal, but we're bullish long term and we're bullish short term. Okay, the next day we're still bullish long term and we're still bullish short term. Okay, the next day we're still bullish long term, but we're bearish short term, and it's not till about 3 days later where we finally get a signal that we're allowed to go in and get short. Okay, and that's it. So exactly what we're going to do is we're going to just follow this process again. I'm going to go ahead and, but I'm going to move it a little bit quicker. This is a bar where everything kind of lines up. The low is here. The lower value here, the lowest of the lower values is right here. So if it goes down below, so let's say $61, I'm going to go ahead and take a short position. Okay. For me, what I would say from looking at kind of the last several bars of activity, I'd probably put my stop right above this high. Okay, which is kind of where it didn't go up above this high. So if it goes up above this high, again, I've got a good idea of what my risk is going to be. But if it goes above this high, I'm going to say it's a bad trade. It didn't work out. I'm going to go ahead and get out of that trade. Okay. So right now on this particular trade, where our entry price is $61, our exit price is $62.82. We have an idea of what our risk is. It's a very narrow channel. We're not taking a lot of risk on this one, so it's pretty good. The very next day, it opens, and at some point during the day, it triggers us into that trade. As soon as it goes up below our defined value of 61.07. we'll go ahead and get into the trade, and we'll put in a stop loss. Okay. Here it kind of goes sideways for a little bit of time, kind of starts to go back up, which triggers a buy signal. When this happens, it's a time to pay attention, because if you get a buy signal and then everything goes bullish, you're going to want to reverse your position. In this particular case, it's just kind of a bit of a natural market testing. It comes back down, triggers another sell signal. Okay. Now, when this happens, Rahul's kind of specific about not adding positions. Like, he wants you to buy initially in when it comes in here. But what he does want you to do is he wants you to move your stop. Okay. So in this particular case, what we're going to say is, okay, well, we just had our change of momentum to the downside. It just happened right here. Since we've had this change of momentum to the downside, what I want to do is I want to move my stop down. Okay, so in this particular case, what we're going to do is we're just going to move that stop loss value. I'd put it right about here, right above this high here. Okay, and I'm going to say, okay, now I'm probably still going to scratch on this trade if I get out of it now, because it's just barely below my entry price, but this is where my new line in the sand is. Okay, and that'll be 60.87. Okay, we do get it right, it goes down. In this particular case, here we get an entry signal. Here we get, and here we get another. Here we get a long signal, which means we start to pay attention a little bit more. It comes in, sets a new resistance area, and I'm just going to move that stop to the top of that resistance area when this signal triggers. Okay. It starts to go a little bit sideways. When it goes a little bit sideways, the market starts to flatten out. Here you get another sell signal, which is another opportunity to move that stop. I'd probably put it right here. And eventually we're going to go ahead and trigger out of that trade. So that's really how it works. It's fairly simple. What you want to do is you want to allow the market enough room to move. You don't want to give yourself too wide of a margin where you're risking it all when you trade. You want to move your stops when you've got the direction of the trend right. It's a very, very simple system. In this particular example, we would have gone from about $61 as our entry price to about 55. Which is a pretty good trade, and it only took us a few weeks to kind of make that particular trade. Okay. In terms of a target, Sam, it's a good question. He doesn't set a target for this since it's a trend following system. He wants to leave it open so that you can hit that home run every once in a while. But what he does say is to move your stops. Another, and I won't go into, I don't actually use this particular piece of it, but it's available. He does recommend if you're using it on a 15-minute or a 30-minute chart that you use the exit swing signal. And he's also said you can use it if you like it on the daily chart as well. But the way that this works, you'll notice that this is the exit swing signal. And right here we went into a short position, right? This was the beginning of our short-term position. And what he says is if it comes up above the red line when you're a short position and then goes back down below it, then you'll institute a trailing stop. Okay, that's pretty much how you would use that. And it's the same for the blue line. The blue line is the one you use for long positions. It just kind of tells you, okay, well, go ahead and start to put in a trailing stop. Personally, I don't use it, but it is one of the things that he recommends if you're trading this intraday. Why is there a blue arrow around June 12th? Right here? Yeah, I guess that's around June 12th. I can look at the date right here. So what we had was we had a little bit of a pullback, right? And the momentum started to shift. The reason this arrow was put on the chart is we had a cross right there of the short term. This would normally be a signal to go long, but we're in a bearish trade. We're still bearish long term and we're bearish short term, so there's no way we're going to touch this to go long. Okay, but what we're going to do is we're going to start to pay a little bit more attention to this stock, because if it does go bullish, we're going to reverse. Normally what happens though, or a lot of times what will happen is it'll generally naturally come up, set a new resistance area, and then start to work its way down, which is why we want to use that when it crosses back down as an opportunity to move our stop down, because we now have a new resistance area. If you're long, you just reverse the rules. You now have a new support area. Is that clear for you, Sam? Hope so. Okay. All right. 4:30. Okay, I have a few more things to talk about. I had to go through 3 of these. It works really, really well. It's very simple. 76% of you said you're on a MetaStock trial or own MetaStock already. So play with it. See how you like it. It's a really, really cool system. Obviously, it's going to work on stocks that generally trend because it's a trend following system, but it works on a lot of instruments. It's a very, very simple. And again, the reasons I like it are, well, actually, I thought I had that slide on here. It's back at the front. Again, it's easy. It's totally objective. We're not looking at, okay, what are the rumors that Yellen's going to increase the interest rates going to do to this stock, or what are the earnings going to do? We're looking at what other traders are doing. We're looking at the trend and making objective decisions. Doesn't work all the time. It's incredibly successful though, and again, it's employing solid money management, which I think is important. Discipline's important when you trade. So to be able to have it all packaged up for you is pretty good. Okay, so that was RMO. one of my favorite systems in MetaStock that are already included. Let's talk a little bit about some other indicators I really think you'll like. And these are the dynamic trading tools. These are indicators that have been in MetaStock for a long time now. I think we added them in 7.0 or 7.2. They've been in MetaStock for a long time, so you may not even know they exist, but they're really cool. They draw for you support and resistance, either long-term or short-term. They draw trend lines on the chart for you, and they come in fully automatic or manual versions. So I want to go ahead and show you an example of that. Let's go ahead and I think Apple will work. Nike would work as well. Go ahead. What I want to do is I want to actually get a clean chart up here, so I can kind of show you how all of these work. Okay. Hopefully I opened it up with a clean template. Yes, it did. Okay, so let's zoom in a little bit. Apple's kind of been a little bit of an interesting stock lately. I'm going to go ahead and remove this expert advisor because it's just a test expert I'm working on. And I want to show you the way these dynamic trading tools work. Okay, so what I'm going to do is I'm going to come in here. I'm going to scroll down all of the into the F indicators, the function-driven indicators. So if I go down to DT, I'm going to see a lot of things that are called DT resistance long-term, DT resistance short-term, DT support short-term, DT trendline long-term, DT trendline short-term, etc., etc., etc. These are pretty cool indicators. I actually have a template that I've designed that kind of use most of these. I'm going to show you kind of how they work. So if I wanted to do if I want a MetaStock to draw a support level, I'm going to just use the automatic one. The manual ones you can go in and change kind of the look-back periods and the sensitivities on. But if I wanted to add this to a chart, I'm going to add it just like any other indicator. So let's start with the resistance since they're right here. Let's do a longer-term resistance. I'm going to go ahead and drop that on the chart. And you'll notice that the longer-term resistance was set way back here. Okay, so resistance longer term is going to be right here. The way I like to look at these indicators, I'm just going to highlight them. Actually, I'll right-click on it. I'll go to Properties. What I'm going to do is I'm going to change the style of this indicator into a dotted line. And since it's a resistance, I'm actually going to make it green. Go ahead and click on Apply. And I'm going to make it a little bit fatter. Okay. Let's see how that looks. I'm going to make it fatter. Okay. So go ahead and apply that to the chart, and you'll see that we've got kind of our longer-term automatic resistance level. Okay, and let's go ahead and add the shorter term. Okay, so I'm going to do the same thing. We're going to go ahead and add the shorter term. You'll notice that it's just looking at a shorter term. I'm going to go ahead and change the colors just like I did before, but because it's shorter term, I'm going to go ahead and make them dotted lines again. They look so much better as dotted lines, but I'm going to make them a little bit smaller so I can easily tell the difference between the longer and the shorter term resistance areas. Okay, I'm going to do that also with the support. So let's go ahead and grab support. Okay, this is the longest term support level. Could go ahead and drop this in. I could go ahead and change the colors. I'll leave this one as red. I'll make it a dotted line and I'll make it real thick. Okay, go ahead and click on Apply, click on Close, and now I've got a long-term support level on the chart. I'm going to do the same thing with the that's the shorter term. Okay, that's the shorter term. Grab the wrong one, so let's make it a little thinner. Apply. Okay, close. And let's go ahead and throw the longer term on there. So what I would recommend is if you want what I've done, and what I think I'm going to encourage us to do in a future build is just make a template with all these indicators already applied. Actually, if you want to email me, I'll send you my template so you don't have to go through making this thing. But we'll go ahead and click on Close right here, and now we can kind of see where a lot of times they'll be the same. You'll notice the two lines turn into one line. That just means they're at the same place. Okay. Sometimes they'll be different. It's not uncommon for support to also be resistance, as you can see right here. As you know. Yeah, okay, so Ergs, I'd be happy to send you the template. It does make it a lot easier. So just email me. Here is, in case you do email me, I'll show you where to put it as well. So just, I'll go ahead and send that to everybody. When you get the template from me, what you'll do is you'll go into My Documents, you go into MetaStock, and you'll just put it right here. So I'm just going to send you an MWC file. Download it, put it right here, and it'll work for you. So and the next time what you'll want to do is then start MetaStock after you do that. Okay. All right. And I'll send a couple of instructions. I anticipate most of you will email me for this template. It's pretty cool. So, and then they do have longer-term trend lines that they also measure as well. So if I actually come in here, I'll just do a uptrend line because it looks like we're in an upward trend zone. I'm going to do it on a shorter time frame. So if I do a shorter time frame, I'll go ahead and merge that. You'll always want to merge these to the scale on the right. Otherwise, it makes a scale over here, and they're designed to be on the same scale. So go ahead and click on OK. That just draws our trend line on the shorter term for you. Okay. So these are really cool. Kind of gives you an idea of kind of where right now we're kind of up above this resistance area, so you can treat it as a support level now. If you're going to go ahead and get long, you could look for a long position here or here, right? The penetration of this resistance area tells me, well, it's probably going to go at least here and probably up to here. With the trend lines, it only draws the very last one. Okay, so it doesn't draw every single one of them on the chart, just the last one. And there was one other thing I was thinking of. If it doesn't find a trend line, in other words, if it doesn't see a place where it can put a trend line, it just doesn't plot. That's normal. Okay. The nice thing about this is, Arnie, email me, and I will. It'll be easier for me if you email me, so just email it to me. Email me your email address and we'll just send it over to you. Okay. The nice thing is having these on the chart is pretty awesome. You can see that we kind of broke through here. It came back to where this support level was, hit off that trend line. I probably established that trend line right there actually, but hit off where that support was and kind of went up. So if you know a lot about trend lines or support and resistance, penetrations are important of those trend lines, right? You want to find stocks that have actually broken through. Since these are automatically drawn, we can also automatically scan for them. Okay, so if you wanted to find a stock, we can come in here to the scanner that had penetrated through support and resistance. You can come in here to this Explorer, and we can just find under DT. So I'm just going to scroll down to my DT, either long-term support and resistance breakout or shorter-term support and resistance or trend line breakouts. So I've already ran the two of them. What I did is I actually searched for DT breakouts, longer and shorter. I ran this just before I started today, and I ran it against the list that I ran was my actual optionable list. It's not remembering it, but my weekly optionable list. So I ran it through about 453 stocks. Okay. The way the report looks, the report's a little bit different, so I want to show you that. It's cool. I like the way they put it together. I just want to kind of explain to you what's going on in it. Okay. So these are the ones that I export at 2:42 my time. Okay. Here's the list of the ones that had come through. It gives us the close in column A. These are ones that have broken up or broken down. Okay, so I can sort on this, and what this means is Verizon Communications broke up 171 days ago, which is probably like more than half a year, about half a year ago, 250 trading days, a little bit more than half a year ago. What we probably want to do is find the ones that have broken up above their support or resistance area recently. So we can scroll down, and if we come down to this, we can kind of look at the ones that have been breaking out one, 2 today would be 1, 2 bars ago, 4 bars ago, 5 bars ago. Okay, so these are the ones that we would look at for those recent support and resistance breakdowns. No, John, it can't. John asked a question. Apple appears to be in a channel. Can it draw resistance trend lines also? No, actually, I'm going to change my answer. Yes, you can do. Well, you can do up and down trend lines. So with the trend lines, I did the up one just because that's where it was, and it appeared to me to be in an uptrend. But there is a downtrend line as well. I'll show you that in just a second. No big deal. Okay. On the breakdown column, if we sort by that number, those are going to give us the ones that have broken down. And again, what you want to do is look for the ones that have broken out recently to kind of put those on your watch list of potential shorting opportunities. Okay, there is an attached expert that you can look at. So for example, what I'm going to do is I'm going to open up let's just look at Teva Pharma. So open the chart. I'm going to apply the template I pre-built already. So I call it DT. I think I called it DT. What did I, let's see. I just made it today because we're doing, well, I was doing some testing, so I was running actually the end of day version of MetaStock this morning, and I always switch back to Pro. And so I actually made it for today's class. And I don't, what is it called? Let's see. Oh, forget it. What I'm going to do here is I'm going to go to the other chart that I've got, save that as a template. Okay, we'll save this as a template. And to do that, just in case you file, save as, I'm going to go to template right here, and we'll call it pound DT. Okay, go ahead and save that. Now I'll go back to Teva. Okay, I'll right click, I'll apply my template that I just saved. Okay, click on apply. Okay, here it is. Okay, so it just barely broke through this support level right here, minor support level. That's why it's coming up. If you want to, you can look at the expert advisor. The expert advisor is called DT. It will give you some basic advice on it. I'm going to do the shorter term support and resistance because that's where it just broke. I'll click on OK, and then if I go to view commentary, it'll give me kind of an overview. Teva Farm Industries broke below its downside support level of 50.26 one day ago. This is a bearish sign. The previous support level of 50.26 may now provide upside resistance. Volume on the day of the breakout was neither extremely heavy nor extremely light, providing no convincing evidence either way as to the validity of this breakout. It also does some volume analysis. It says, okay, well, there wasn't enough volume to kind of to justify this as a short opportunity. If it did it, then it would say, well, you should go ahead and take a short, or you should consider a short. If you do, where would we want to put our stop? I'm waiting to see if one of you guys answer me. We'd put our stop right above our resistance level because it could be a fake out, right? And if it comes back up above this level, then it was a fake breakout, which happens. So when we go ahead and take a short position here, we'd put our stop right above it. I promised to show you. Okay, so this isn't exactly. You can do all kinds of channels in MetaStock. The two trend lines that are automatic is the trend line up and the trend line down. So, and you can do those on longer term or shorter term. So let's go ahead and do a shorter term, see if it finds anything here. And so it is looking at a downward trend line from the highs. The upward trend lines, it looks at the lows. The downward trend line, it looks at the highs. And you can, of course, apply both of those. Okay. All right, so that's DTT, or Dynamic Trading Tools. Hope you guys liked it. If you have questions now would be appropriate. And we'll go on to the LCI System. I'm just looking to see if there's any last questions coming in. I'm going to look at my watch. 15 minutes. Oh, we got a lot to talk about in the next 15 minutes. LCI. So some of you guys may have talked to Logan in the past. He started as a support representative. We moved him over to sales. He did a really, really good job. And now he no longer works for us because he trades and manages money and trades on a pretty full-time basis. He's actually managing some money for a wealthy Saudi, from what I understand. And he's really enjoying it. He says, I talked to him like a couple of weeks ago, he says it's boring to not work in the office, and I agree with that. As somebody that's worked from home for an extended period of time, it's not fun not to come into an office, but he's a very, very good trader. And he does it totally professional, totally real-time as well. This is a system that he designed while he was working for us, and as I guess a going away present, he gave it to us as something that we can include in the program. And it is a very, very cool system. It's going to automatically identify support and resistance levels, kind of like what we were just talking about. It also looks at Fibonacci retracement levels, volume exhaustion, and volatility. It actually looks at, I think he told me one time, and I'm not sure, so I guess I'm not sure, but it looks at like 94 different variables to kind of come up with like its buy and sell signals and its scoring patterns and that kind of stuff. But these are kind of an idea of kind of what it looks at, kind of gives you trailing stops and trailing profits and that kind of stuff. So let's go ahead and just show you kind of how it looks. There's a couple of different views that you can look at. We're going to go ahead and, I don't know, let's go ahead and close that down. And I want to switch to Apple. I've already got a chart of Apple open. I'm going to go ahead and apply one of the templates. This is the actual template that I prefer for LCI. So again, this is included in MetaStock. It's just part of the platform. If you like it, there's tons of videos that he's done on his website that you can look at that kind of go into more detail than what we're going to go into now. I'm going to go ahead and go to the apply template. What I'm going to do is I'm going to go down to LCI. Okay, so all of these are named LCI. The one I kind of prefer is the SR main. Okay, and I'm going to apply the chart to you, and when I apply the template for you, when I do, it's going to be a little bit busy. I'm going to warn you about that right now. We'll go ahead and apply it though. And don't worry, I'm going to kind of walk you through exactly what this template is and what it's doing. We're going to go through it one piece at a time. So, well, first of all, let's start with, I'm going to zoom in a little bit. We can look at kind of some of the signals. You had a little bit of an SB. You had a major bounce, a primary bounce, a breakout trade here, a breakout trade here. So the signals on Apple look actually really, really good. There's some things that kind of automatically go into these signals to kind of tell you where to buy and where to sell and kind of that kind of stuff, right? Up here, this is, we'll start at the top. This is the Williams percent R indicator. He calls it the LCI percent R. The only difference is that instead of going from 0 to minus 100 in a scale, he didn't like that scale. I find a lot of people don't like that scale. Instead, he goes from 0 to 50. Okay, the way you kind of read this as an indicator, to simplify it maybe too much, is if you're down here below this level right here, and you get a buy signal between either these green lines, it gives it more strength. Okay, so in this particular case, this major bottom, or I'm sorry, major bounce, I always call them a primary bottom and a major bottom, but this major bounce off of support would be stronger because of the Williams percent R. Okay, so that's this indicator. This is how you read it. If you're up here, kind of in between these two levels, and you get a sell signal, it has more power to it. Okay, and it's really kind of how you read it. Okay, down here, it's going to automatically be plotting major Fibonacci support and resistance areas, and in the dotted lines it's actually going to be plotting minor support and resistance levels. So it automatically plots those. We didn't do anything to add them to the chart, we just applied the template and they're all there. By the way, when you work with his indicators, you'll want to apply them as part of a template. Okay. Down here, there's some major signals that he uses. They're major bounce, primary bounce, breakouts. These BKs are breakout trades, and then the SB is a support bounce, a support major bounce. Okay, there's a few of, there's probably about 6 of them, but they're primarily what he's looking at is he's looking at where support and resistance are. He combines that with his indicator scoring, which I'm going to show you in a second, and kind of gives a bounces off of support and resistance, as well as breakout trades. Right, this one was a breakout through support and resistance. Okay, it's all automatically done for you. Down here, you'll notice this is volume. Okay, and he color codes volume. Okay, so if it's above, if it's green, it's a major bullish volume and increasing. If it's kind of light green, it's bullish volume, but it's decreasing. If it's red, then it's going to be bearish volume and decreasing or increasing. So that's the way you would read the volume readings. Okay. You'll also notice there's 3 bands. Okay. And basically, if you have a MB, major bounce, and you have a green bar, and it's above the top band, that's a very, very good signal. Okay. Whereas if you don't have a lot of volume, if it's down below this lower band, it's not as good of a signal. You wouldn't give it as good of credence. Okay. Sam asked a really good question. Appreciate the question. Does LCI change labels, like say for example from PB to MB and vice versa, or lose a label from PB to MB? The only time a label will change or go away is if the bar is not closed. Okay, so if we have a bar now, we don't have any of these signals right now, but if we had a signal today, the market's closed, it's not going to change. This was a major bounce. If we would have looked at this on 9/12, at the close of the market would have been a major bounce. Those don't change. It's not like it's looking at pivots and zigzag functions. It's actually looking, and in which case, Sam, that's a really good question. When people are looking at like zigzag and peak and trough functions, labels have a tendency to change because zigzag has a tendency to change. What he's looking at is he's looking at where support and resistance are, and determining those type of things with it. Okay. Lewis asked me to explain the color of the candlesticks. I'm going to be embarrassed, but I'm going to be straightforward with you. I don't remember the color of the candlesticks. It's not something I actually have paid attention to in the past. Yeah, obviously I don't use that particular part of it. Logan could tell you the difference between the colors of the candlesticks. You can run a simulation with these in an expert advisor, but I think what you meant is a system test. Can you do a system test with these? And the answer is yes, you can run a system test with them. They do have system tests. What are the horizontal dotted lines on the volume? This, I think you mean kind of these lines that they're not quite horizontal. They do move up and down. These are kind of his extreme bands for volume. So if it's down below this level, you'd say that the volume is very weak. If it's kind of between the 2 bands, you'd say it's somewhat between a normal. And if it's above 0, above this upper band, then it's very, very strong. Yeah, we can look at a different symbol. I do want to kind of just show one other part of this, which I think is really cool. Actually, I can show it on Nugget too. Let's go ahead and let's just switch to Nugget. What I want to show is kind of the scoring. He goes through, and remember I said there's like about 100 different indicator variables that he uses. And I said I remember him saying there's like 70 or 100. It's a huge number of things that he looks at as part of this. But there's a whole scoring that comes into this when you get a signal. And so I want to show you kind of how that works and how he kind of breaks that down for you. Let's go ahead and change to Nugget, though. I think the signal is NUGT. Oh, NUGT.K. Okay, there we go. Go ahead and open that up. It did that to me earlier today. Let's go ahead and open up a new chart. NUGT.K. Okay, it's coming this time. Woo! Okay, let's go ahead and apply the template to it. I could have done that from the Power Console, but I didn't. LCI, we'll do SR main. I'll go ahead and apply that to the chart. Okay. So right now, actually not a recommendation to buy or sell, but we did get a buy signal today. We've gotten some buy signals in the past. This one didn't work out so good. This one went up to, you'll notice, the first resistance area and just ran back. I do like the fact that we're getting quite a few signals in a row. It tells me that there's support here. But this breakout to the downside was pretty good. This breakout to the upside was pretty good as well. So there you go. Okay. Let me show you the scoring system. Lewis, I think that depends on the, Lewis asked a question. Is this system for scalpers, swing traders, or long-term? I would say it's swing. And if you're looking at shorter, not scalp, but you'll notice if you just kind of take a look at the chart here, you're in on a daily chart, you're in for maybe like and you got this major bottom which would have gotten you out, but you're in this trade for maybe 5 or 6 days. Okay, in this trade you're in it. I'm going to explain how. Oh, I forgot to talk about how the stops work. Silly me. Let's go ahead and talk a little bit about that. But in this particular trade, you got the breakout to the upside, and you were in for 1, 2, 3, 4, 5, 6, 7, 8. This bar you would have got out on, and I'll explain why. Okay. One of the things that I almost neglected to mention is this blue dotted line. You'll notice there's a blue dotted line that trails underneath the price of the security. And sometimes you get two dotted lines. So right here you get, there's only one. Okay. Here you get these are basically your stop loss values. And when the market starts to go sideways, what Logan likes to do is he likes to kind of lock in more profit. So he'll use a closer stop loss. So right here, if you're in this trade, you're going to have your stop loss right here, right here, right here. When the volatility on the stock actually decreases, you move up your stop. Okay. Well, the very next day it went up a lot. So that little blue dot went away. When the volatility is higher, it doesn't show both dots. Here, because it's starting to go sideways, the volatility is losing. It's showing both examples of the volatility. So this is what you would use as your trailing stop. If you take this little breakout trade and you get in, your stop loss is here. It's a trailing stop loss. If it starts to go sideways and lose volatility, then you want to kind of get more aggressive about getting out. You'd go ahead and kind of use a shorter one. All right. You're welcome, Lewis. Let me show you the scoring system. If I come in here to view, I'm going to go to the expert commentary. Logan did a really good job with this commentary. I really kind of like the way it's put together, but I would recommend you make it about this big before you throw it on the side of your screen, because it's kind of designed to be about this big, right? You have kind of like your measurement here, and actually it might even need to be a little bit bigger. No, that's fine. Okay, so I'm going to go ahead and dock that over to the side here, and we'll go ahead and kind of look at kind of the scoring behavior. So I'm just going to move to this breakout just because this is what we're looking at right here. This is the the bullish breakout, so it just broke through a support resistance, it broke through a resistance area, which is why we got this signal. And this is kind of telling us how the management is. So he gives you a bullish score and a bearish score. Okay, this one was about tied 50-50. It was 35 was high, 35 for down. Okay, and this is the maximum score that he'll ever give on a signal is 90. And I asked him, well, why 90? Why not 100? And he's like, well, I don't ever want anybody to think that there's a perfect trade out there. So I cap my scale at 90 so that I just want people to realize that there's never a perfect opportunity. And I thought that was pretty cool. But in any case, so 35 and 35 means the bullish and bearish are about a wash. Okay. Bullish breakout management, since we did get a trade this day, it's telling us entry management rules. Within the next 3 trading bars, the price must break above 25.08 for an allowed entry. See, he likes to do the same thing like Rahul likes to do. He wants an additional confirmation that it's going to go up above a certain value. And if it goes above 25.08, you can go ahead and get long. Okay. If the price gaps above the entry price, go ahead and enter. Okay, he does leave a little bit of a disclosure there. Your initial stop loss on this trade should be 19.14, and he breaks down what the risk is going to be initially with that trade. It's going to be $5.94 from your entry. Okay, kind of gives you an idea of what a breakout exit is. The breakout signals are a momentum-based entry signal. Exit when closing price is below the adaptive LCI stop. Okay, gives you some analysis of some of the indicators that he's looking at. Recent price movement indicates a stronger bullish trend right now. That's his analysis of the bullish trend. Price range is typically larger and has supporting volume. Bullish breakouts are expected when this occurs around the most recent minor resistance level. If this occurs at the top of a range and is followed by a volume exhaustion, this indicates a selling off climax. Okay. Also looks at some volume figures. He looks at cycle and price. He tells you what his Fibonacci values are, and he gives you a trailing stop loss. Now, remember, right now he's only reporting one trailing stop, but if we go forward a few days, he's going to give you both trailing stops. Right now, he'd recommend a tight based on the current volatility. The volatility improved, so he's actually kind of then goes back to the longer one on the next day. And these values are updated every day. He gives you his bullish bearish biases every day. In the case that you have a breakout signal, it'll actually tell you exactly what your entry conditions are, what your initial stop should be, that kind of stuff. Ergus. Oh, wow. Well, I do. I do, Arnie. It's not. It could be one of my top 5 favorite things in MetaStock. Ergus asks, can these methods be used in Forex? Absolutely. Generally speaking, with Reuters, I'm just going to go ahead and cheat right here. We cover about 382,196 instruments, and that includes like 192 exchanges, all of the major currency pairs, all of the minor currency pairs, and absolutely you can apply these to Forex. So anyway, that's LCI in a nutshell. Again, I tried to do it justice in about 20 minutes or so. I did a pretty good job, I think. If you like this, I know most of you, 74% of you have MetaStock already, according to the poll we ran earlier. So if you like, I hope this is helpful for you. These are the things I really like to play with in MetaStock. They're included with you. The reason I showed them to you is they're free, and so if you like them, go look at maybe the longer trading videos, start to play with them. They're ready to go. I will do a bonus answer for you, Arnie. Arnie asked a question, do you have anything on how to read candlesticks? Well, as a matter of fact, Arnie, I do. So let's go ahead and show you that real quick. I'm gonna go ahead and close this chart out right here. And let's just look at this real quick. I'm going to change this to a candlestick chart. Again, I'm going to go to candlesticks, because we're going to look at the candlestick expert, right? Go ahead and click on close. This is also built into MetaStock. It didn't make my top 3 list, but it is very cool. I'm going to go up to, I'm going to go ahead and click this guy on the top hat right here, Expert Advisor. I'm going to go ahead and go to brain fart. What did they say about the debates? I'm losing steam. Okay, let's go ahead and attach this. We'll go ahead and click on close. This will label and identify for you 32-ish candlestick patterns. So if we're looking at Nugget today, we had an engulfing bull. It's just really to kind of help you identify what patterns are happening on a chart and help you learn about candlesticks. So if we look at this right here, an engulfing bullish line occurred, and it actually says the engulfing bullish pattern is bullish during a downtrend, which appears to be the case. It then signifies that momentum may be shifting from the bears to the bulls. We just looked at this just had a buy signal as well, so you could use that as a confirmation as well. So, oh, that's my email. Let's go ahead and chat it in there. I have a question for you guys. Here's my email address again. It's just jeffrey.gibby@metastock.com. How many people here, because we have about 53 people here in the room right now, how many of you started MetaStock because of the online trading summit that we did 2 or 3 weeks ago? Here's my email address. Just say yes. I want to know who you are. Send to all. Okay. No, not a lot of yeses coming in. We actually did pick up a lot of trial subscriptions, and so if you are here because of that, oh, Stan did it because of our one of the one we did about a year ago. Okay. For those of you that did pick it up, well, thanks anyway. Thanks for being a MetaStock customer. That's what I wanted to show you. In any case, LCI is a little bit more of a. We did a trading, Michael asked what trading summit. About 2 weeks ago, we had an online trading summit. We do them about we do them 4 times a year, but I don't do them quarterly. I just do them 4 times a year. I don't do them quarterly because like our business is very seasonal, which means like in the summer everybody goes and they enjoy their holidays. But we just did one a few weeks ago. I have another one scheduled for November, but they're big events. We had like 7,200 people register for the last one, which I thought was really, really cool. But I really appreciate all of you that use MetaStock. If there's anything I can do to help you, let me know. I'll get back to you, I promise. I do want to just kind of warn you guys a little bit before we close up today. We did have some pretty good Oh, for the Bigelow question too, or the candlestick system, one of the things that I actually like a lot is Steve Bigelow's candle profit systems. Steve's really cool. I use a lot of his methodologies every day. I'd recommend you take a look at that one. We're not going to talk about it at all today because it identifies like 26 of his candle patterns, and it works really, really good. It's an add-on that's available for MetaStock, though, because it's got Steve Bigelow's name on it. It's been extremely successful. And it's been rated Stocks and Commodities Reader's Choice Awards, not the winner, but one of the finalists or runner-up or what. I think it's 3 times now, but I'm not sure about that. Yes, LCI does have scanning as well. Hey, Jamie, we don't have an add-on that we retail for Steve Primo. We talked to Steve about doing that, and he wanted to include it with his course. He wanted it to be available only as something you could get along with the course. But I actually created the first version of it myself, and then they created a lot of the other methodologies for it. Stan's like, that's the one that got me, is the Bigelow's. I really like the Bigelow's one. But all of these are awesome. If you, the special, if you want to get into the add-ons, the specials are going to expire next week, so I can pull the list and send them to Stocks and Commodities. So, so if you want to pick any of these up, it's a great opportunity to do them. It's a great savings. You save at least $100 up to $150. You get 2 years of Stocks and Commodities with them. And I already did the getting the most out of MetaStock bootcamp, but we did save it, so you can get that as well if you need it. You can call us at 800-882-3040, or you can visit us at metastock.com/saleschat. For the few of you, like 26% that haven't tried MetaStock yet, you can try MetaStock on a buy 1 month, get 3 months offer. If you do that before the end of next week, you'll get 6 months of Stocks and Commodities, totally free of charge. And to do that, go to metastock.com/Trader Summit 3-for-1. If you're in the US, they actually will mail you a magazine, which I think is really cool. I like the printed magazines. So go ahead and do that. You want to do that within the next week. At some point, I just have to say, okay, that's enough. I have to pull the list and get it to Stocks and Commodities so that they can kind of do that delivery. I did record this, Timothy, but I'm not sure which slide you want related to RMO. But I can make all of the slides available to you. Just email me. I can send you a copy of these slides. Yes, Rob's add-on is already discounted at 50% off. If you go to buy other versions of his add-on, they're like $2,000, but we have ours on an intro. Ours is better, because I like to make ours better. It helps us sell them. Ours is better because they have all the alerts, they have the commentary, they have the scans. It's not just the indicators, and they're half price of what they actually are normally. So right now we've got them on an introductory special. So, and I would recommend those for, obviously Rob has a great, I think he's one, I don't have my notes here, but I think he's won like 16, 17 real live money competitions trading futures. So if you like to trade futures and you want to trade real time, I'd really recommend you take a look at Rob's. That's it for me, guys. I did have a whole bonus session in case this went short, where we're going to talk about Haguro. Maybe we'll save that for a different day. Haguro is really cool too. And I don't think there's any way we would have went short, but I'll talk about Haguro on another time. Haguro is a really, really cool kind of way to kind of set up a forecast for the next week. It's not available in MetaStock, but you can get a little bit of a training on it. And you can download it right here. If you go to metastock.com/Haguro, you can watch a little bit of a video of me talking about what. It's totally free. You just download it and put it in MetaStock. We're actually going to include it for free in the next version of MetaStock. I like it that much. So in any case, I'm going to go ahead and wrap up. Thanks for coming today, guys. And I will see you at the next one. Let me know if you have any questions. Let me know if there's anything I can do to help. And if you're on the fence about some of these add-ons, you've got 1 week to get off of that fence. You're welcome. You're welcome. You're welcome. You're welcome. Let me know if I can do anything to help. And thanks for coming. Really appreciate it.